6 secrets the banks don't want you to know. There is so much your bank isn't telling you about your money. Don't be surprised, we are about to expose them and help you save more money. In this video, we are going to tell you 6 secrets the banks don't want you to know about your money. Henry Ford, the founder of Ford Company, said it was better that Americans don't know how the banking system works, or else there'd be a revolution the next day. Ford was absolutely right. The banking system has sugar-coated everything to give you false hope of financial security when in truth, they are milking the masses dry. Due to the intricacies that surround bank activities, so much information is hidden from the unsuspecting customers who just want their money to be kept in a safe place. Theft and insecurity have made us so bent on saving our money in the bank without ever stopping to ask ourselves, how does the bank thrive? How do they make their money? What keeps them? Could there be something they are not telling us? We are not saying you should go right now and withdraw every money you have in the bank, dig a hole and hide them, or give it out to charity, which would be a modest thing to do. But we want to uncover these truths. No more secrets, as we are about to tell you what the bank has been hiding from you all these years. You won't believe number 4. Let's jump into it already. Number 1. Bankers' fake friendships. Your banker friend doesn't care about you. Whatever it is they do is for their benefit. It doesn't matter if your banker remembers your birthday, sends a loving text, memorizes your name, or calls to check up on. They are only trying to reach their target. I'm sorry if that hurt you a little, but this is the truth. Bankers are given a target every month, and they risk losing their job if they don't meet this target. A banker would fake friendship to gain your trust, then push you into making a financial decision you didn't prepare for. Imagine taking an $80,000 loan just because your banker said it was best for you. To avoid this, be on guard. Make money decisions based on your actual needs and don't let anyone persuade you. You are an adult that can make your own choice. Beneath your banker's seemingly harmless smile is a strategy set out to catch you unaware. Number 2. You don't own any money in the bank. This is probably funny to you. Your expression right now could either reflect surprise or shock. Well, we are still telling you some truths about the bank, right? Here's another one. It's nothing but the truth. You might deposit some cash and assume it is your money, and it will sit in the bank till whenever you need it. This is not the case. In reality, as your money is just represented as figures and electronic data, it is not physical in any way. The bank uses your money to do business in the form of lending loans and providing mortgages. This is why if a crisis should occur today and everyone makes to withdraw their money, the bank won't have enough money to pay everyone. Fractional reserve banking is a policy that permits banks to lend out your money to those that need it in return for interest. Though your money is safe and protected by insurance, meaning you can get it anytime you want it, it is out there right now making more money for your bank. 3. Foreign transaction fee. Banks charge you for using your credit card in a foreign country. If you travel to another country for a vacation or some time out with your friends, the more you use your credit card, the more happy your bank is. You are charged for every transaction and any payment. Do you doubt this? How about you take a trip today to a different country, spend about 3 to 4 days, then check your bank statement afterwards. Your bank won't tell you. Why would they let you in on this secret? They wouldn't want you to make other payment choices, of course. The good news is there are programs out there that save you from this excessive expenditure. You just have to ask the right questions to know the right program for you. Hold up, it's getting more interesting. But before we go to number 4, if you like the value you are getting from this video, click on the red subscribe button. Also, turn on your notification bell to get more finance and money-making tips from us in the future. Also, give this video a thumbs up if this truly interests you. Now we've gotten that out the way, let's forge ahead. Number 4. I know you've been waiting for this the whole time. Your credit card makes more money for the bank. Though it is not a bad omen to own a credit card, as it is convenient and easy to walk around with, but sure has its cons. Do you know that when you purchase items from a shop or mall and you pay with your credit card, some percentage of your money goes to the bank? Normally, the merchant is supposed to pay this percentage, but the truth is you are the one paying. How, you are asking? The bank provides machines to the merchants and in turn extract a certain percentage whenever a card is swiped. The merchant wouldn't want this percentage to be taken from their profit, so they increased the price of goods and services to meet up with the bank fees. Imagine the bank takes a 3% processing fee from every card transaction a customer makes, and an item you want to purchase was supposed to go for $100. The merchant would place the price at $103 so that the amount taken from the bank is deducted from your money. Wise move. Have you ever thought about why the bank lures you with so much incentive? Just so you could sign up for a credit card? Now you know why. Aside from the bank using promos and bonuses to make customers sign up for a credit card, humans naturally love the convenience and would prefer a less stressful situation to a more stressful one. So we'd rather own a credit card anytime that queue up to get our money from the bank. That's why it's very easy for the bank to feed off us unsuspectingly. Number 5. You lose money every year. What the bank doesn't tell you is that keeping your money in the bank does not help you. As the year goes by, inflation would catch up with your money and it would not represent the same value it did a few years back. Inflation is the increase in the prices of goods and services over some time. What this means is that the amount of money you buy a product or pay for a service today would not be the same amount of money in a few years or even a year from now, as the prices of items would increase. Let's say you buy a laptop today at $1,000 a year from now or so, the same laptop could be bought at $1,500. Inflation in the US is estimated at 2% on average. If your interest yields 0.3%, you lose 0.97% every year. That is a huge loss if it piles up over the years. A lot of people think that the bank is doing them a favor by adding interest to their money. The interest doesn't even equal or exceed the losses over time. It is better if that money had been invested in a venture that would yield more returns. Number 6. Check your account every day. No matter how busy your day would be or the workload you have on your desk, don't be too occupied to check your account, as you may incur charges that are not yours. Malicious activities may happen in your account, or someone could be trying to get away with your money. Quickly report any charge you discover in your account that is not yours. Although your bank may try to make away with it or avoid rectifying the error, it is a law that if you report this kind of case within a 90-day window, the bank is to refund your money in 48 hours. So stand your ground when making such a report, knowing that you are legally protected. In the nutshell, banks don't tell us everything we need to know about the everyday transactions we make and the losses we accumulate due to these transactions. However, it is not a bad idea to have a bank account and hand over our hard-earned money to the bank, as this information would guide us in making wise financial decisions. And that's it. Which secret did you have a hunch about but wasn't so sure? Let us know in the comments section.